Hello Wolfpack. So we've just had a weekly candle close on Bitcoin, and we've just also had a few fresh daily candle closes that we didn't really look into too much in previous videos. What I can't help but notice is the low volume on those daily candles. You can see that the volume throughout the duration of January all the way through to last month has been significantly in the medium to higher range and generally trending downwards as per what is typical of a bear flag formation. However, as of recently, as we enter the support zone, we've obviously had that capitulation event in which a significant amount of longs were liquidated. We saw a long squeeze, a bull trap, and a massive drop down to that 30k support region. But now the interesting part about that is that volume has stayed low, which kind of represents the fact that, well, a lot of people aren't really interested in these prices right now, right? A lot of people are sitting on the sidelines. They're not sure whether Bitcoin is going to go up or down, and they're not really interacting with the market, which, you know, is an explanation for that low volume. So it doesn't necessarily mean anything. Now, the thing about volume right now that a lot of people are talking about, and a lot of what I will say as well, is that volume doesn't mean anything by itself. What matters is the way volume trends. Right now, we do not have a significant volume trend other than the fact that we see a slight deviation to the downside with the volume while the price moves upwards, which would generally be bearish. However, assessing all the other information with the daily chart and looking at, for example, the 4-hourly chart, we can't help but notice the fact that Bitcoin doesn't look the worst here, okay? Short term, we're bouncing off the 30k support zone. Again, that support zone stems back from all the way from January 2021, all the way through to May to July 2021, and stemming through obviously up until recently, only around 5 days ago when we first touched that support region again. So as of right now, we have to assume that Bitcoin is oversold going into support, which is slightly bullish in the short term. And we have pointed out in the past that we have seen an inverted head and shoulders pattern on the 4-hourly chart, which would target something like 33k. Now, above that, we have some sharp resistance coming through from these downtrending lines that were previously forming a descending wedge formation, right? These two dotted downtrending lines, and those are going to be coming to an apex at around 36k. And I have said previously, and I'll say it again, I don't think Bitcoin will be reaching above 38k. I think the highest it can possibly go during this dead cat bounce region, which could last, by the way, a couple of months for sure, will be 38k. That is the highest point it will go. Why do I think that? Not only due to this uptrending red rectangular support region, resistance region, also due to these downtrending lines, and also if we look at things like, for example, the bull market support band, the Gaussian channel, the Ichimoku cloud, they are all going to be trending towards that 38k region in the next few days, or I should say the next week or so. And so it seems extremely unlikely that Bitcoin will have a significant bounce similar to what it had in something like January 2021 or something like June 2021 off that 30k support region. I simply think that 30k support region is overwhelmed at this point. This is the third macro retest we've had of it. And yes, I do think it will break to the downside, which is as per my kind of November prediction. This is the 4-year cycle theory. I've redrawn the chart. It's not actually a theory anymore. It's a trend, because obviously a theory constitutes 2 trend points. In order to create a trend, you need 3 points of data. We have 3 points of data now from 3 separate cycles, 3 separate bull cycles, and 2 separate bear markets. It is a forming trend, but it is still a trend nevertheless. And this is the trend that I actually used to predict the top, or 10% from the top, in November 2021. And I will be using it to predict the bottom. Now, my original bottom target for Bitcoin was 24k. That's played out. I will say now that what I'm expecting for Bitcoin is to do something like it's done before, right? Over the course of Bitcoin's lifespan from 2014, right, we've seen 15 months of macro retests on the 200-week SMA, which is this green line here, this green moving average. I would expect Bitcoin to go back down to the 200-week SMA. It has technically reached my preliminary price target of 24k. However, it hasn't tested the 200-week SMA as much as I would like to see it. What I have been made aware of from some of the people in the comment section before is that, you know, Bitcoin actually did come down and test the 300-week SMA in the COVID drop, and I have been asked questions about that. I'm going to be addressing that later, but the main point that I'm trying to get across with the 4-year cycle theory is that the estimated bottom, according to this trend, is going to be November this year. I know this kind of conflicts what I said in my last video, which I said that there is actually a potential that Bitcoin could bottom out as early as August, and I still stand by that. There is a potential, however, the most likely bottom is going to be November this year, possibly December. And that's what I've stuck by since last November, and that's what I'll most likely stick by until the very end, because the 4-year cycle is the biggest piece of macro evidence we have to kind of predict date ranges in terms of local bottoms, right? Now, we do have the weekly candle close. It's closed fresh on Bitcoin as of 3 hours ago here. And this is a very interesting weekly candle close. I spoke about this on Twitter quite extensively yesterday. What I pointed out is that Bitcoin has not closed a weekly candle close below that 31.8k region, which I'll just mark out right now, since pre-2020, so during 2020, right? So in the entire bull market, the entire 2021 bull market, it actually hovered above that 31.8k region on the weekly candle close. I said on Twitter yesterday, I said that, hey, if it closed below 31.8k, that's a massive hit to the macro structure. I also said if it closes below 28.9k, that is an even bigger hit to the macro structure. We've done one of those things. We've closed below 31.8. We haven't closed below 28.8 or 28.9, I should say. So the macro structure isn't completely ruined yet. You can see that if you were being generous, right, and this is if you were being very optimistic, you could technically say that Bitcoin is still very much holding onto that support zone. However, it is a very big point of weakness, not only that we have closed within that support zone for the first time, but the fact that we've wicked so sharply below it, right? Some people will flip that and say, hey, that's bullish strength because it shows us a lot of buying pressure below, but that's not necessarily the case the way I see it. The way I see it is that this support zone has been very strong in the past to the point where we haven't even wicked below it, and now we've seen a wick below it, and not only that, we've seen a close within it, which kind of signifies the first kind of, the first inklings we can see, or the first pieces of evidence we can see of that falling apart in the future. Now, before I get into the rest of the video, I do want to talk about the Crypto Academy. The pre-order sale only has, by the time this video gets out, probably 2 hours remaining, right? So if you want to learn how to become a trader, we've got a 10-unit course dropping literally within the next few hours here. Again, we have a pre-order sale, so in 3 hours, that price will be raised. But if you get to us right now and you contact us by cryptoacademycourses@gmail.com, you will be able to lock in that pre-order price, even if you don't pay today, as long as you get to us and email us and get your interest in there and display your interest, we can lock in that pre-order price for you for a month. So if you want to learn how to trade during the bear market, that's the best time to do it, when everything's kind of boring, everything's a bit slow, so you can be prepared for the next bull market and honestly make some profits in the bear market as well. This is the time to do it, so go ahead and check that out. Again, 3 hours into that course launches. But moving on for the rest of the video here, I do want to talk a bit more about the 4-hourly chart. Now, we had that inverted head and shoulders pattern. Obviously, that was broken to the upside, and we said yesterday that that could lead to 33k Bitcoin. I still stand by that. What we're seeing right now is a resistance support flip. At this point in time, we have no reason to believe this is anything but bullish in the short term, right? A resistance support flip on the 30k region. We can expect something like this at this point. That's what the TA would suggest. Whether that happens or not is a different story, but I'd give that about a 75% probability of happening. And so I do think that a short-term bounce is relatively likely on Bitcoin. And I do think that the daily chart does support that to a certain extent. We have something like the Bollinger Bands, saying Bitcoin is essentially dramatically oversold at these prices. And moving on further, we have something like the stochastic RSI and the MACD. The MACD almost coming in for a bullish cross, and the stochastic RSI at those oversold regions. So yeah, short-term, you can basically, flip a dice or roll a dice, I should say, and that would be your result there. It's kind of hard to say what's going to happen here in the short term. What I can say is that Bitcoin's oversold on support, but the macro is bearish, so it's quite hard to kind of understand the short term too well. But I will go back to that point I made before. 38k is probably the highest we can go on Bitcoin in a dead cat bounce. If we flip 38k, we have to start thinking about the possibility that the macro situation might be flipping bullish. I don't think we'll get there, and I don't think we'll flip that though. So moving forward, we can look at something like the weekly chart. Now, I have spoken about the weekly chart extensively before, especially the Gaussian channel on the weekly chart, and I have said, you would recall, I've actually said that the Gaussian channel will be flipping red this week. Now, that didn't happen, right? This isn't something that was a failed prediction. It's just something we simply cannot know for sure due to the way this kind of line curves. The Gaussian channel will most likely be flipping red next week now. And as you can see, the past 2 times Bitcoin has had that red flip on the Gaussian channel, it has led to a 50% correction within a matter of weeks. So that is obviously a very bearish event. Moving forward even further and pressing on into this analysis, we can see the 3-day chart has a death cross, and that is actually played out. So this is, by no stretch of the imagination, I mean this quite literally, the biggest warning signal we have seen on Bitcoin in 4 years since 2018. Now, what I would say is you shouldn't be putting too much emphasis on this death cross now, because we've already seen the reaction, in my opinion, that the death cross kind of, held for us. Obviously, moving average is a lagging indicator. You can predict whether a death cross is going to happen or not. And so as you guys would know, the price is driven in a cryptocurrency market, in any financial market, by people buying and selling. If people buy, the price goes up, people sell, the price goes down. And so if there's enough people aware of the fact that a death cross is happening, they're going to be reacting to that situation before it actually happens. And that's what we've seen here. So I wouldn't expect the death cross to actually cause anything directly anymore. I think this drop was partially caused by the fact that the death cross was extremely likely. So the death cross has already caused something. And I think this is a problem that a lot of people have with analysis and technical analysis, is they think that, they look at death crosses and they look at golden crosses and they look at the price action that happened after that, and they think that, well, it didn't really do anything. But it's not about what it does, right, afterwards. It's what happens before as well. Because again, you can predict whether a death cross is going to happen to a point in which, there's no room for error. I mean, even back here, in April 1st, 2022, when we were at 48K, at that point, the lines were curving so sharply towards each other, and kind of, you could honestly kind of say with almost a 90% certainty there was going to be a death cross. And so you could react to that situation, and we saw that reaction. So I would say that the death cross is something we can kind of put aside, although it's extremely bearish, and although the other times we've seen massive corrections, we've already started to see that correction that was probably caused by the death cross. And so it's not an indicator we need to be looking at too much anymore. What we can look at on the 3-day chart, though, is the 200 SMA and the 50 SMA. Right, what we'll notice is that in previous times of Bitcoin, when we've seen that death cross and we've seen that massive correction, that correction kind of continued or didn't flatten out until we broke back above the red line, which is the 50 SMA on the 3-day chart. So when we get back above that 50 SMA on the 3-day chart, that would be an indication that perhaps the bottom is in on Bitcoin, and that's what we're going to be using the 3-day chart on in the future. So before we get into the rest of the video, I want to talk about the BitGet exchange, and I do recommend this exchange a lot. This is just not just like a shameless shill. I do use Binance and I do use BitGet. They have some of the lowest trading fees in the game, and obviously BitGet has that no KYC option. So regarding crypto regulation, you can kind of avoid that. So let's get into that. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian, because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box, and you will receive up to 153 USD deposited into your account as a reward. Pressing forward, I do just want to quickly give a brief little rundown on the recession that's going on in the United States of America, and obviously the global pending recession that's going to be happening quite shortly. And we are feeling the effects of that right now, with cost of living skyrocketing, not only in the US, but also in most Western countries. And I'm sure a lot of third world countries of course, as well, which we've kind of seen propelled by the pandemic and the printing that has come from that. And in this period of time, we are seeing the DXY skyrocket. What does this mean? The DXY, first and foremost, is the US dollar currency index, which measures kind of the strength of the US dollar in relation to other global currencies and also other global assets. And so with this skyrocketing, what it actually tells us, it goes hand in hand with people selling off risk-on assets, right? So right now, the trend is people are getting rid of their risk-on assets. They're selling into cash for security because they're scared of the risk-on assets falling in wake of the coming recession, right? This trend is not good because, well, guess what? Bitcoin is a risk-on asset, right? Stocks are risk-on assets. If there is a recession, if the DXY is pumping, if the US dollar is getting stronger, right, in relation to other currencies, that goes hand in hand with there being a downfall in kind of all financial markets, possibly sparing gold, right, which no one really cares about in the crypto space, obviously, because Bitcoin is digital gold. But that's definitely not a good sign. And then moving on to something like the bond yields, we can see that the bond yields have reached levels we have not seen since probably, June or July 2019. If we look at interest rates during June or July 2019, we can see that interest rates during June or July 2019 were actually all the way up here at 2.5%. And what that kind of tells us with interest rates right now at 1% is that interest rates are going to be going up significantly more as priced in by the current state of the market, right? And this is only going to worsen the effects of recession and hence intensify the effects of the DXY pumping, intensify the effects of people wanting to sell their risk on assets like Bitcoin, like the S&P 500, like their ETFs or whatever. and kind of hoard into cash. And when people hoard into cash, they're generally doing it out of security, right? For two reasons. One, they want to preserve their wealth, and two, they don't have wealth anymore and they're trying to get all the wealth they can out of the market so they can kind of survive, right? And obviously when people are kind of in a situation in which they're trying to survive, there's not going to be much money or spare capital to invest in financial markets, which kind of worsens the effect even further than what I already explained. So not only right now is the Bitcoin chart bearish in terms of TA, we can also look at the fundamental analysis, look at the macroeconomic situation and the geopolitical situation, and understand that there's nothing really going on there that's going to be positive for Bitcoin. And so when I see people say things like, you know, Bitcoin bottoms in after this long wick, it's like, well, I don't think you're necessarily grasping the full extent of the situation, right? This is more than just a candlestick formation. This is a macroeconomic and geopolitical trend that's going on here, in which there is extremely bearish indications for the cryptocurrency market and the traditional markets. You know, I think that so far during this correction we've seen in 2022, more money has been drained out of the traditional markets than was drained out of traditional markets during the COVID drop, than was drained out of the traditional markets during the dot-com bubble, during the 1980s crash. I think maybe even during the Great Depression. Obviously, the value of dollars has changed since then, but the point is, it's a very, very, very major correction. It's a very, very major thing, and to pin it down to something like a candlestick formation as a reason for Bitcoin bottoming out is a little bit almost foolish at that point, a little bit nonsensical. And so I want to move on now to the comment section thread. Now, if you have any questions for me that you want me to answer during the video, make sure to leave them in the comment section. I'll choose them and reply to them in the video. I've got two comments here, and one of them is from Don Capo, who says Bitcoin never saw the face of a recession. It will go down to the 300-week SMA. Now, that is obviously correct. As I've been saying during this video so far, Bitcoin has never been around for a global economic recession, right? This is the first one it's been in, and so technically we don't really know how it's going to react. Some people would say that's a reason to assume Bitcoin will bottom out and go to the moon, right? I would say that's a completely logical argument to make, because at this point in time, Bitcoin is actually very much connected to those traditional markets. And so if those markets go down, Bitcoin, of course, goes down. So when you say something like Bitcoin's going to bottom out here because there's going to be a recession, that's going to make everyone like Bitcoin, you're actually investing against the trend. And as you guys would know, one of the most fundamental rules of investing and trading is invest with the trend until it ends. So you're acting against the number one principle of trading and investing when you assume that Bitcoin will go up here, right? That's how I see it, at least. So as for the 300-week SMA, now I looked into it at the start of this video here. The 300-week SMA is this blue line. I'd be very cautious about kind of saying Bitcoin will go down that blue line. The only time it's ever happened before is during a pure capitulation event, the COVID crash. It's only happened once, and we can't form a trend out of something happening once. However, because it has happened before, yeah, we can't form a trend out of it, but we do know that it is possible. And so with that kind of knowledge, we can say that it is very much possible Bitcoin will wick down to that 300-week SMA, which is currently at 16K. It'll probably be at like 18K by the time we get there. That's very much possible at this point. I don't know if it's likely, but it's definitely possible. So moving forward, I've noticed something different about bottoms between charts. What charts are reliable, Binance, USDT, etc. So he's essentially referring to the fact that different exchanges during this drop have reached different prices. Now, this is something I do need to explain to you guys, because obviously I have said over and over again, my 24K target has been reached. Some people have quoted me on that and said that, well, that's not the case, because if you look at the Coinbase chart, we only reached 26K. Now, during major periods of capitulation, you do see different exchange charts on TradingView show different price valuations. That is because they don't get the data from one place. There's no centralized organization that controls where the data comes from for the price of Bitcoin. Each exchange measures it themselves. Each exchange monitors it themselves based on their trading prices. And so you are going to get slight deviations, especially during times of high volatility. But what I can say is that you should always be using, and this is a fact, you should always be using the exchange with the most trading volume to analyze your charts. And that exchange is, of course, Binance, right? And Binance, it reached 24K, and so 24K was the price that we saw there. Now, before I end the video here, I do want to talk about Wolves of Crypto membership. Now, I've been running this for a few days here. We've got a 2-hour video on market psychology, which is absolute gold. And then we've got a trade setup posted already. If we click on the join button, which all you need to do, by the way, to join is go to my channel page, click the join button. You can see it's 40 AUD a month, which works out to be 20 USD a month, or 28 USD, I should say, a month. You get loyalty badges, custom emojis, altcoin trading signals, so 3 to 4 high quality altcoin trading signals per week, which is obviously the main selling point of this. And you'll also get access to that 2-hour video on market psychology. And then additionally, and this will become increasingly valuable as the channel grows even further, I will prioritize replying to members' comments rather than just regular viewers' comments. Obviously, as the channel grows, I won't be able to get back to every single comment. I still, at this point, even at this level, at 8K subscribers, I still can't. There's a lot of comments to get through, and so I will prioritize responding to your comments if you are part of the VIP channel there. So, without further ado, and with that said, thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.